This video may be the most important one from our No Fluff Trading video series because it discusses the basics. This video may be the most important one from our No Fluff Trading video series because it discusses the basics of the footprint, a BFI footprint. Now, for those who are sleeping, BFI, banks, and financial institutions, that's who we care about. When they sell or when they buy, that's what moves price. Not me and you, but the BFIs. And we need to understand this footprint, which we can see only after they step and they print. Can we know what exactly happened at the origin of this footprint? But we need to define this BFI footprint. And here's the definition: an impulsive move that breaks previous market structure. Let's break each word down because it's really important. And by the time we're done with this video, you should be able to understand what a footprint is and understand the definition of it. Let's start with the first part: an impulsive move. Clearly, there are a lot of types of impulsive moves. It could be a very strong one. What do I mean by strong? It goes A to B in a few candles versus maybe a move that takes 30 candles to get there. It's weaker, but there's an impulsive move, and it could be strong, it could be weak. The number of candles from A to B maybe can tell you. And that's definitely a big factor in this footprint is the impulsive move and the way it moved from point A to point B. Let's look at the next important word, which is breaks. So this impulsive move, or this upwards impulsive move, breaks previous market structure. But let's focus on breaks and how it could break. Let's just say, we'll get to that word, but let's just say that this is a previous market swing point. And what do we mean by that? A few candles up and maybe a few candles down. You can think of it as a U-turn. So there's a previous swing point, and then their impulsive move breaks this swing point. Now, let's look at the two kinds of breaks. The market can break it with through a body and close above. The market can also it's not a body, but it breaks it, but it ends up as a wick, although it did break it. If this breaks it by 1 pip, it's a valid footprint. Is it a strong one? Are they strong break? No, very weak, but we need to understand it's valid. And understand that it could be a body that closes above, or it could break and end up as a wick and maybe even a down move after that. But the way it breaks is also important to differentiate. with a footprint. Every single footprint is unique and different, and you have to be able to read the footprint from a neutral standpoint. Is it strong or is it weak? Are you against it or are you with it? Let's look at the next word, which is previous. Now, previous to what? This is an impulsive move, A to B, and it broke previous market structure. But by previous to the origin, previous to the origin of the A to B move. And you can even, baby pip style, put a vertical line and something to the left has to break, or else it's not a valid footprint. This is not a valid footprint until it breaks this previous swing point. A swing point that occurred before this A to B movement happened. Why is this so important? Because let's look at this selling here, which was red. All of this selling, somebody came in and it was completely, you can think of it as completely absorbed and even more. And then there was a footprint. But the fact that these sellers got taken out tells us that the buyers are in control. This is why it's so important. It has to completely wipe the previous swing point. The harder and stronger, the better. The stronger the footprint. But that's what we mean by previous to the origin of the A to B move. Now, this last point, previous, okay, we understand that. Market structure. There's a few ways we can say that. They can call it swing points. Like we said earlier, a few candles down and then maybe a few candles up. This is a swing point. Not every candle is a swing point. You want a nice clean swing point, the better. But let's take a look at this. The market is going down, and here it is. And let's say it enters into a buy zone. Here are the swing points. Here's one, here's another one, here's another one. What's the difference between a footprint that only breaks this and then comes back versus a footprint that breaks all of these and then maybe comes back? The point is, if it breaks one footprint or one previous swing point, if this breaks only one previous swing point and then returns very weak zone, if it breaks multiple and then comes back, very strong zone, although it's the same price levels, but like we said here, there's probabilities at the first retest, which means how many swing points did it break? How much market structure was broken? Here's some good advice. Don't trust a footprint that breaks the first previous market structure, the first swing point, the earliest swing point, because what do we say? It could just be a retracement and it wipes it. So it's not really reliable to use just the first market structure break, although it is a valid footprint, but a very weak one. What do we want to see? It breaks multiple and then it comes back. That is the higher probability. So it's all probabilities at the first retest. What is the footprint you're dealing with? It's so important and it's a key part of your approach. And it's a logical approach. You just have to look, if you're trading at a zone, look at the footprint that you used, because every zone has to be validated with a valid footprint. Yes, it could be valid, but there's shades, there's flavors. It could be a super weak one, some 4 hour basing zone that just broke a very little swing point versus maybe a weekly footprint. So it's probabilities, like we say, but understanding the footprint and the definition of a footprint. It's just an impulsive move that maybe breaks a previous market structure. The more, the better and the stronger. And it just means the more that they sold at the origin and the stronger the zone. Not a bad idea to get to work if it were to come back to this origin. Hopefully, this clarifies what a BFI footprint is, because that's a key part to this no fluff trading series as we go along, especially as we discuss volume in the next few videos. We need to understand this is step one, the footprint of the zone and how strong it is or how weak it is, and understanding the definition of it. We'll take a look at an example before we go on to the next one. Look at this very weak swing point, but it is candles down, candles up, and we did get a break, which is a valid footprint. We also had this, which is another swing point. Notice that there's also another origin from here. The market returned to this origin. You had a slight reaction, triggered some selling, but went up here. Look at this footprint here. When it breaks multiple, it just means it's a stronger footprint from this origin. Not a bad idea to get to work when it returns to the origin of a strong footprint. There are strong footprints and weak footprints, and there are some footprints that come from a basing zone, from a down movement, pause, and then another down movement for a full bearish continuation, we call it. But these basing zones, especially on a 4 hour, are very weak. And yes, it's a valid footprint, it's a valid zone, and maybe you got a valid trade. But it's all probabilities in the end. Understand your footprint, understand your zone, understand the strength or the weakness, the context, and maybe you'll get a better idea of the probabilities. Start with understanding a footprint and its definition. And then that will clarify what we mean when we discuss volume. Because understanding volume, you have to understand the origin of the A to B move, because the only way an A to B move occurs is if there is some volume and there is some work being done, and that volume video will clarify that, drawing the proper origin and using volume to do that. But this one is strictly on understanding the footprint and the definition of a footprint. And hopefully now you can see a footprint in a more neutral view and understand probabilities. When you understand how to draw a footprint and the way footprints occur and how strong they are and how weak they are, and if they're 4 hour or 15-minute or weekly, you'll understand probabilities.